stock market price is a random walk, then why are you still using technical analysis? I have been using technical analysis like chart patterns and indicators. I found the price and patterns indicators don't have a strong correlation. I was puzzled until I learned about random walk hypothesis. Why do people still use technical analysis? Is it because they don't believe the price is random in the short-medium run, or they may have other reasons? One more question: it is reasonable to use historical data to predict the market? Because humans are moronic pattern-matching chimps and look for trends whether they are there or not. Why do people smoke cigs when they know it causes lung cancer? Humans are irrational. People do what they want to do. Just predict the future. What's so difficult about that? I usually get a pretty good read on the markets by dropping a handful of chicken bones on the ground. They show me the trends. At least as good as the CNBC chartists. Technical analysis is astrology sky charts for traders. Trend following with technical analysis is complete bullshit, and the random walk theory is the true nature of the market. Also, the random walk theory is complete bullshit, and trends can be found and profit extracted through use of technical analysis. Welcome to the markets. Big difference between the market is efficient and the market is mostly efficient. TA predicts how others who use TA will trade. Most pros I see using it are never using it in isolation. They use it on top of other fundamental work. The TA is an overlay for entries, risk management, confirmation and validation of the FA, swing trading moves that overshoot their FA, etc. It's also often used cross-asset since these are often price drivers. Enter index short only if X rate level is breached. There are few money managers who just sit and draw a wedge and that's it. If someone had a technical analysis strategy that actually worked, they wouldn't tell you. There's a difference between the price being random, and not knowing why the price is what it is. Question better asked to our day trading, since this is an investing sub and is anti-anything trading. All you will receive is echo chamber responses. Because that which you ask are two different schools of thought as to the market. Random walk would be from the quants, while technical analysis would be from the chartists. Everyone has their own ideas as to which approach works, but most long-term investors would be more a fundamentalist approach with diversification. Technical analysis is about as useful to investors as tarot cards. I don't use that made-up bull crap, I use legitimate methods like voodoo. Even factor models only explain 50 of the volatility of equities, and obviously alpha is still being harvested in new ways. I don't think you really understand this theory as well as you think. I have never doubted that fear and greed lead to some patterns. People shouldn't be using TA. It's dumb and pointless. Doesn't work. But humans love patterns and looking for them. The quality of posts on here has gone down significantly since Reddit ended the API. This thread is a perfect example. I enjoyed the back and forth between two morons discussing what Bridgewater does without any actual knowledge of how to construct a volume-targeted RP portfolio. You stated a premise as though it is a proven truth. If your premise was proven true, your question would be valid. It is not. From a logical standpoint, technical analysis is complete bullshit. There is no real basis for it rooted in hard math. That being said, there is a theory that since so many people practice TA, they buy and sell subconsciously based on these patterns and actually become a legit influence on the price. I'm still unconvinced outside basic momentum and trend reversion. Those make sense. Technical analysis is horoscopes for boys. Good lord, it's not a crystal ball, smiley face. Does it help to identify entry and exits? Most definitely. You snarky dorks really hate anything that doesn't involve depositing money and clicking the buy button and holding till retirement, huh? Anything that veers the course is rolling the chicken bones according to some of you. Even if it meant gaining a better price entry, you'd refuse to utilize a very useful tool even for long-term investors. PPA use technical analysis because they are good at their job. Salespeople selling courses, books under false pretenses to gullible saps. I use TA to determine if a particular name is at a good entry-exit point after I've used other methods to determine whether I want to own or sell the name. I use tea leaves because they want to have a basis to legitimize their gambling. Oh, I saw a pattern forming, so I bought it. It's all bullshit. That's why firms aren't hiring chartists. They don't make money. Instead they hire fundamentalists or quants who base their trades on real math stats. People drawing lines on a chart are simply foolish, and everyone in the industry has a kick out of them. Other people are using charts and technical analysis to make decisions, so if you want to predict what they're going to do, use charts and technical analysis. I personally have found that the only technical indicators that mean anything are support and resistance. But what is the market going to do next week or next month? I have no idea. Humans do human things, not random things. Whenever humans make investment decisions, they leave traces that can be observed and exploited. If you think the market participants doesn't leave any traces, you just were unable to find them or looking at the wrong ones. If you think market participants are random, I don't know why you're trying to make rational investment decisions. I have been a strictly TA-based trader for 6 years. Consistently profitable month over month, and I don't read the news whatsoever. Anyone telling you that you can't use TA to understand price action is absolutely clueless. How do you think high-frequency trading algorithms work? It's technical analysis on a millisecond level. Because it works. You have to factor in pride. If the investment performs well, the investor can claim that their gains are a result of hard work and effort. That all the academics, and statistics, and financials review, etc. are what produced those gains. Or, if it performs terribly, it was an educated guess, not to be confused with the other guy that didn't spend 40 hours before playing at the same casino. There's a lot of confirmation bias therein. Are you trying to use past performance to predict the future, or are you trying to use variables like interest rates to do so? One challenge is that the price of stocks is a chaotic system highly influenced by hard-to-measure factors like human behavior. The other obstacle is that by the time you find out about data that will influence prices, the market will likely have already responded. I believe there is no scientific evidence that random walk can produce a yield on a long run. Prices might be random in mid-term, but tend to correlate with money supply. You need technical analysis. 1. Because robots tend to trade with technical analysis. 2. To tell whenever prices are too low or too high. Generally it is no good to use your intuition to tell whenever price is too low or too high. 3. Managing risks and stop losses. For average Joe, there is no better option to use historical data to predict market. Markets are not random. They are algorithmic and very precise in price delivery. Technical analysis does work. There are statistics for different patterns as far as the outcome. I don't use it, but that is the premise and the stats don't lie. I am not saying I recommend trading solely on it, but I have definitely seen many merits to technical analysis. I am a terrible trader, so I have just stopped trying to be a trader. Technical analysis is a self-fulfilling prophecy. People follow it because people follow it, and vice versa. Otherwise, we would be in a perfectly efficient market. Real technical analysis isn't the patterns and BD retail traders use. Unfortunately, you'll never know what true TA is and what the actual levels are. Just because you couldn't make it work doesn't mean it doesn't work. Random walk is the justification for investing in index ETF and paying your dues to all ST. Because random walk is bullshit. Market data is everything but random. Behind every candlestick is a ton going on. They may appear random to most of us. But some people get really rich for a reason.